We're not waiting for opportunity, we create an opportunity. We're not waiting for opportunity, we create an opportunity. What's your net worth? What is your net worth? That's the check-in, right? I'm gonna start doing the check-in weekly with you. And we're gonna talk about what your net worth is. This is gonna be a weekly self-check-in on yourself, on your revenue, your expenses, what your loss is like, what your gains is like. It's gonna be a self-inventory, weekly, maybe bi-weekly, monthly. But we're gonna talk about different parts of the net income statement, the profit, which is also called the profit and loss statement. And I'm gonna show you how that ties into you yourself. Because many people out here trying to get to this wealth, get to the riches, right? Get to the self day, right? Days that they can afford, right? Because you can't have a self day if you can't afford it. And you need a self day to make yourself feel better, right? To make yourself better. You need a self day. And the more self days you have, is the more self days you can afford, is the more wealthy you are, right? So what's your net worth? What's your net worth? All right, so I'm gonna keep it real simple and plain in this when we talk about net worth, right? So when we're talking about the income statement, the net worth statement, right? The income statement, the profit and loss statement. When we're talking about that, you're looking at your revenue, you're looking at cost of goods sold, which is anything that's related to the revenue that you're making, that you have, that you have to pay in order to make that revenue. If that's service, if that's inventory, whatever that might be. Then your operational expenses. Then you have non-operational expenses, but we're not gonna go there. We're just gonna go to operational expenses, right? Things that you need to keep going, the business going. Then you have losses and you have gains that are outside of that. And then you have your net income pre-tax, right? What your net income is prior to tax, I mean. And then you have your net income after taxes. So check it. How we're gonna look at it is like this. We're gonna take it from a 9-to-5 point of view, and I'm still gonna mix it up with some business point of view as well from an income statement, profit and loss. I'll be using these words interchangeably, income statement, profit and loss, to get to your net worth, right? So say you got a 9-to-5, right? You look at your 9-to-5, that's your revenue, right? So you're gonna look at your overall gross on your 9-to-5 before all your deductions, okay? So you'll see that on your paper, your overall gross, what you grossed that day. Okay, I mean that week or 2 weeks or that day, however you're paid. Then you're gonna look at cost of goods sold. Those things are gonna be related to your revenue, and that's how you're gonna find out your number to your gross profit, which is your top line, right? That's your top line. There's 3 lines of profits within your net profit in your income statement. So you have gross profit, operational, right? After operational profit, expense profit, then you have the net income profit, right? So sometimes 4, because people have prior to taxes and then after taxes. So it just depends. But your gross profit. So when I tell you you have your W-2 and you're sitting in your W-2 and whatever is a cost of goods sold to that would be something that you have to pay for or you have to have in order to do this job. So say you were, let's just keep it simple again. You have to get to the job every day, right? Every day you have to get to the job. So you're gonna think in your mind what you gotta pay, right? So is it gas? Is it Uber? Is it a bus? Is it a train, right? You have to pay this amount so you can get to the job, say, if you're not working from home. You got to get to the job, right? So you're going to take that out and say, okay, well, I got this, but this also is a part of that. Because if I don't get to the job, I don't get paid. So these things go hand in hand. If I don't get to the job, I don't get paid, right? So that's an example. Another example of that, of getting revenue and the cost of goods sold, right? Something that's directly correlates with the service or the inventory, whatever you're selling. Inventory, right? Say you're selling t-shirts, right? If you're not doing drop ship, right? Even if you are doing drop ship, you have a cost for the shirts before you sell it, right? The shirts are going to cost you a certain amount. If you get it by bulk, if you get it by single, and to ship it out, right? To get a package. All those things are a cost to you prior to you selling it, right? So those things, you would get a revenue. Say you sell a shirt for 20 bucks. Say one shirt with everything, shipping, buying it, packaging it. Say it costs you 16 bucks. You would take that $20 minus the $16, okay? Then that'd be your overall gross profit of $4 because you sold the shirt for 20, right? That's just an example. I'm not saying you have to sell for that price. You can go higher. So that's what that is, right? So if you're working at W-2, however, I would say, however you would need to get to that place, whatever you need in order to do that job that you have to pay for, that's going to be a direct cost to that revenue, right? So then you have your overall gross profit. Okay. Now you have to think about, now thinking about yourself, right? Like a company would think about also, a company may have a business building, right? May have trucks, may have different things that they need, an administration staff, right? Usually when you see an operating, which is after your gross profit, operating expenses, those things are usually like depreciation any machines and buildings that they have, wages, which is paying any employees and administration, things, rent, things of that nature, utilities, things to keep the company going, onward going. It's not directly affecting the revenue, the sale, the service. It's not directly affecting it, but it's still needed for the overall company to run, right? So with you now, you have your W-2, say your cost of goods sold, whatever you pay to get to work, right? Now you have your gross profit. Now you're looking at next is operation expense, what your rental mortgage is, what your insurance is, food that you need, not that you want. Everything operation expense is going to be a need, not a want. Okay, let's remember that operation expense is not wants, they're needs, right? For you to live day to day. So, the clothes that you need on your back, right? And your shoes, things that you must have, right? The water, utility bill that you pay, the water bill, the light bill, right? Things like that. Car insurance, you know what I mean? Health insurance, things like that. Those things would be operational expenses to you. Now, after that, now you have your profit from after that, after operational expenses, right? What you have left over, gross profit, after, you have your gross profit, then you have your operational expenses. Now you have, operational profit, right? After all of that. Now, after you have that, now you have something else they call, which is others, can be losses or gains. Now, these things are extra things that are not needs, right? So in a company, what they would do is they would have interest gains or interest expenses. So if they took a loan out for an organization, they're paying expenses on it. That's an extra expense they have to pay. It's not needed, but maybe they got the loan to do something with the facility, right? Something. So the money is accounted for that they took for because they bought a building. So that's accounted for, right? But the expense is extra, right? It's extra that they agreed to pay. So they have an extra expense. That's a loss. That's an extra loss they got to pay, right? Or if they did a settlement, usually it's a settlement, right? So you got a settlement for, they got sued for something, right? And they settled. So they had to pay. So that's a loss, right? That takes away. So your loss as a person would be, you're going to go out this weekend and you're going to buy something that you didn't need, or you're going to go party, or you're going to take a trip somewhere. That takes away from your revenue, right? Taken away from you. That becomes the wants, right? Or you may have a gain. You may have some crypto. You might have some stocks. You might have sold something that you made real quick on the side. You may have a side hustle going on, right? This is coming from a perspective of a person, a W-2 person, okay? A waging, a person who works a 9 to 5. So now you're getting a gain from that. So you're adding to the income, right? You're adding or you're subtracting. So if you're spending on things you don't need, that's not a must, that's just a want. That's taken away, right, from you, right? And if you're doing something to create more income, that's not a norm, that's a gain, okay? So now, after that, now you see, okay, what your overall net worth is prior to taxes, okay? So then you can go back to your W-2. You can look at what they take out for taxes, or I would suggest you look at the tax bracket for everything you just put down there where you would fall in, okay? Because as you know, sometimes a lot of times you have a W-2, you put it in, and you've been paying tax throughout the year, but depending on how much you make and if you're single or if you're filing jointly or, separately or whatever it might be, you still might be owing taxes more than what you paid for the year, right? Or you may be owed. So I would still tell you to look at that network pre-tax number and go to irs.gov, look at it and see what tax bracket you fall in that you would have to pay. Or you can talk to a tax advisor. We have that link down there too if you need somebody to talk to about those things with taxes and accounting and things like that to help you. But I'm telling you this from a personal perspective, right? I just want you to have the information. So now after you get your taxes, you minus that, right? Now you have your overall net income. Now when you're looking at that, you're like, okay, I'm negative, or I'm zero, or I'm $10 in. This is where you start looking at now your net income sheet, right? You start looking at it, your income statement, and you start saying to yourself, what is in here that's causing me an issue? Start doing the ratios. Start doing some math there. Looking at your overall gross profit and looking at everything else that's taken from that and seeing how much percentage that is of that, or looking at your revenue. You know what I'm saying? Start doing some math there. Again, you can go on our link and we have people there that can help you as well. But you can look at this and say, where am I spending my money incorrectly? Where I need to save at? Or do you not even have any extra gains within your net income statement, right? Like in income statement, do you not have any gains? Do you not have an extra section for that you're making other gains off of? If that's a investment in a 401k, an IRA, Roth after taxes, or however you're doing it, or investing into a side hustle, or, something like maybe that's where the issue is. That's why I like the little extra ones that has the loss and the gain after you have your revenue, cost of goods sold, which give you your gross profit, your operational expenses, which give you operational profit. Then you have that other, which is, your gains and your losses and interest expenses and things like that nature, right? These extra things that you got to do extra with. That's why I always say you got to do extra, right? So you can either do extra and you're going to lose, or you can do extra and you can eventually get something back because you have a gain and a loss. So you have to make the choice of where you're going to do your extras at in order for you to get your net worth where it needs to be, And there's also some other things you can do in there prior to taxes, right? To help you. Like I said, the 401k, the IRA, traditional IRA Roths and things of that nature, to help you to lower your tax rate to keep more of that money to yourself, but you got to still invest it somewhere, right? All right. So, but you have to look at these things and see where your network is. And I'm going to be talking to you like this about it every week. I'm going to bring it up to you, and just say to you, like, where are you at? What are you doing? What are you doing? Where's your net worth at? What's your net worth this week? Or where you at? Are you doing anything to change where it was last week? Are you looking at your trending numbers for like a month, right? Or 3 months and seeing if anything changed, if it's going up, if it's going down, where you took the hits at? Are you paying attention to yourself? You have to look at yourself the same way an organization looks at itself. You have to. I know I went through this really quickly and gave you a spill on it. I'm going to go into it more detailed eventually. Each week we're going to talk about a section of it and how it can apply and what you could do with it, and looking at it from a personal perspective, because we also can look at ourselves like an organization, an entity, and can structure ourselves as that so we can be profitable and be wealthy, you know what I mean, and have value. So, what's your network looking like? What's your network looking like? So like I said before, we're not waiting for opportunity, we're creating opportunity. We're not waiting for opportunity, we're creating opportunity.